There's so much turmoil going on right now, and there's so much confusion. I mean, listen, I know today the most recent report on inflation came out. It's 8.5%, 40-year high. If we took away food and gas, you're still looking at core inflation, which is 6.5%. Once again, its greatest high since 1982. And, the question becomes is where do we deploy our money? Do we save money in a bank? I'm going to say wrong there, right? But also, how do we deploy our money in all other areas? And what does it look like not just relying on the stock market? Not that I'm saying don't use the stock market, but when it comes to an overall financial mosaic strategy, how do we position money where we're not just putting it all in a savings account? For example, if I had $100,000 in a savings account right now and nothing changed for the next 12 months, because inflation is at 8.5%, that money would be worth $91,500 12 months from today. That's the effect of inflation. And can you imagine if, in fact, you're at an 8.5% inflation rate and the market, which, by the way, right now we're in April, the NASDAQ's down 15%, the Dow's down 6%, the S&P's down 8%. Can you imagine if all your money is tied up in there, but now you're 60, 65 years old and you're looking at income coming out of those buckets? The money is eroding rapidly if that's where you're at. So at the end of the day, you want to make sure that you diversify within and amongst asset classes. And once again, savings in a bank account, wrong, up to a certain percentage. So I just talked about it, and let's kind of dig into this and see what this looks like. And listen, am I saying that inflation is going to stay at 8.5%? No. The chief economist over at Morningstar is saying that, and I'm not saying this, but go look him up and look at it, April 2022. What he's saying is that he believes, because gas prices are starting to come down, oil prices are starting to come down, he believes the worst is now officially behind us. That's his opinion. I don't know if that's true or not. But for folks that are out there, and if all your money is in a savings account right now and it's been there for the last 12 months, even while the market went up, you lost some money, right? So we need to understand how important it is to know how to deploy our money. I mean, I know that I think it's I-bonds, and go check this out, folks. But I-bonds are offering 7.5% for the next 12 months. And imagine if you had $10 million and you wanted to put $1 million into I-bonds. The problem is it's so good, they only let you do $10,000. Think about that. It's so good, they only let you do $10,000. Now, there's going to be some smart folks out there, couples that are married with 2, 3, 4 kids, and they're going to put $10,000 in for each kid and each adult in an I-bond if they can, to maximize that 7.5%. That's a really good rate of return, but guess what? It's still below inflation. So when we start to think globally about a financial strategy and we look at what we like to call the financial mosaic, all the different asset classes, the hard assets, the paper assets, the intellectual assets, the YouTube channel asset, all these different things that exist beyond Bitcoin, beyond 401ks, beyond stock portfolios, it's important to understand at the core of that, what is your investment philosophy? And oh, by the way, if you like this video and you want us to do other videos, please put that in the comments section. Also, at the end of the day, if you want us to sit down and talk to you, no obligation, go ahead, click the link below, and one of the team members here at Epic will sit down and have a conversation. But just remember, it's not about putting your money into one specific thing. It's about what is your mindset and how does your wealth compound overall. Now, what I always believe, whether stock markets are going up, whether they're going down, whether Bitcoin's going up, whether it's going down, whether real estate's going up, whether it's going down, if you incorporate in the overall game plan cash value life insurance where you're overfunding it and it's part of the overall strategy, you're putting a seatbelt on all those other assets. This is a longer conversation, okay? But at the end of the day, by running money through the insurance plan and having a long-term view, not like, 12 months or 6 months, and being able to kind of leverage off the insurance to go buy real estate, right? I'm never going to say leverage off of insurance to put money in the market or put it in Bitcoin, but I am going to say to leverage off the insurance to either finance your own debt, start a business, acquire a business, or use real estate. Because at the end of the day, especially on real estate, you're going to get multiple rates of return off the same dollar. Not only the the rate of return you get inside the policy, but the 4 different rates of return, which as we know is cash flow, mortgage interest write-off, depreciation, and we expect the property to depreciate over time, those are inherent in these strategies. And if you do it 5, 10, 15, 20 years, your wealth will be turbocharged. And when you get into times of inflation, or when you get into times of market volatility, or taxes begin to get higher, the level of protection you have as time goes on is impeccable. And it's something that should be considered at all times when it comes to your overall philosophy. You know, and it's funny because I know when I was a little kid, I was taught early on to put money into a savings account, right? That's what we're taught from day one. Now, when I was little, I remember those, those club savings accounts. I forget what the actual name was, but I was getting 5, 6, 7%. You know what I mean? Now, over the last 10 years, that hasn't existed, but that doesn't mean it's not going to exist again at any point. We just talked a little bit about what the I bonds are getting, and if inflation stays up here, you will get more money in a savings account, but right now it's still less than 1%. So at the end of the day, it's always important to understand that, yes, savings is good as a fundamental, but how you save in your overall process is important. A lot of times when I sit down with people and we get into the worst case scenario, they talk about the dollar devaluing and how does that affect the mutual life insurance companies that are out there. Remember, when you're doing overfunding life insurance or cash value life insurance, you want to make sure that you're working with the best carriers with the longest track record. And at the end of the day, when interest rates have been so low, part of the dividend that these carriers pay is based on interest rates. And what I can say, when inflation or interest rates go higher, these carriers tend to get stronger because of the fixed instruments that they put their money into. So once again, this is a longer conversation. If anybody here ever wants to dig deep into the carrier conversation and maybe get on the phone with us and some of the higher ups at these companies where we could break down, or they could break down exactly their philosophy and what the level of protection is from a devalue, that's always one phone call away. So don't forget, once again, click the link below. Feel free to put that into the comment section. We'd love to have that conversation with you as we go through the success process. So thank you for sticking with me this long. It's been about 8-9 minutes. I appreciate it. Every single day we're dropping new information. We're trying to drop as much financial education as we can. So go ahead and click that link below if you want to sit down with one of the team members. No obligation. We'd love to sit down and answer any questions you may have. And by the way, if in fact you want us to do other videos, go ahead and put that in the comment section. We'll make sure that we do that as well. Thanks for checking in.